Hi, everyone. How's everyone doing? Can you see my screen? Everyone see my screen? All right, you got it? Okay, good. So do you know, can you guys see these dots?
I can see your mail.
Okay, you see these dots right here, Blake?
Yeah.
Okay. I got this from Norm Winsky. This is the conjunction between Saturn and Jupiter. And you'll be able to see this on the horizon. And the last time it was like this was the Middle Ages. So it's not going to happen for a long time. I'm not saying, what it's going to mean to the markets, but I find it interesting, especially things that haven't happened since I was a kid in the Middle Ages. What do you think, Blake?
Since the Middle Ages. So
yeah, it's like
literally
14.
When's the last time it happened?
I think 12 or 1400 years ago.
Wow.
And that's how infrequent it is.
When you were living in the Middle Ages, like, 1975. Just kidding. But wow.
When I was a serf.
You know what else happened in the Middle Ages, Dale?
What, Steve?
People probably believed in astrology. Hopefully in 2020, these people are,
very, very few. Astronomy.
Yeah, but the interpretation of astronomy to try to determine what's going to happen in the markets or in our lives is in the vicinity of astrology, not astronomy. I haven't heard any astronomer trying to predict what's going to happen in the markets because X star approaches Y planet.
Well, this was predicting that an ancestor of yours predicted that in 2020 that you would be cynical about this. So you go back, about what, Steve, 100 generations, and one of your relatives was going, one day one of my relatives will say, it doesn't mean anything, but it's pretty, right? Okay. All right. So let's get back to what everyone cares about. Dollar index trying to come back inside of this falling wedge. We had a throw over. This line, I think, means something because, after it cracked it tried it a few times, and we got through it, and they were trying to take it back down. I mean, the dollar's due for some type of pullback. I think this is the day they had Tesla. So maybe we got some type of dollar reaction to the upside, and maybe the S&P's pulled back. I don't look for a lot of things, but I think this is this rebalancing with Tesla could cause some volatility. So speaking of volatility, this doesn't look too bad on the 2 hour. I mean, we're holding the lows at 20. This kind of looks like we're trying to come out of here. So there's a possibility that we could get, a dollar pop. Yen's putting in a higher low here too, as well as a dollar. You see the two of them, yen looking a little better. And if that's the case, I know there's a debate going on, but you look at the 10-year, it's mainly sideways, but I could say it's just as easy to be constructive as it is to be negative on this. A scientific dimension. Okay. All right. And the gold, a little bit lower. It doesn't look as bullish on the daily as it does on shorter time frames. The silver does. I mean, except, we're maybe just a correction too, even though it's a breakout. We'll see. I guess you can't say it's bad unless it's back under 24, but the gold's been demonstrably weaker. And, are we going to blast to new highs, or is there one more shoe to drop? It's all going to come down to risk off or risk on in the S&P and the dollar. And I rest my case. because Moon River, wider than a mile, I'm crossing you in style someday. Okay, so any questions? Starlight, Star Bright, let me get some pips tonight. Fletch, oh, Chevy Chase, I don't know. Anyway, watch its line in the dollar. I know there are a lot of projections lower, and I could see how it could happen. But yesterday, Euro went to 22.60. There's nothing wrong with it on the daily, but this is kind of a negative candle. So I'm not doing anything today, but those are my thoughts. And I think it's, the next couple weeks, we'll have some thin markets. Mira says it's in the SPY today. And I guess this was the Moderna news last night, this spike. All right, so the S&Ps have barely recovered the spike high, whereas the NASDAQ's almost, it was almost there. So guys, everything looks like a coin flip to me today. So that's going to be a wrap, but be careful being bearish a dollar from these levels and being bullish the S&Ps from these levels. That's all I could say. And the Aussie, the Aussie is making a lower high up here too. So, we're getting a lower high in Aussie, and this is one of the strengths, but I can't short it because of this. So that's my description of today. Today's a great day, guys, to sign up and get ready for the new year. Gives you time to get adjusted to the platform, one of the best platforms that you're going to find if you're an FX trader. It has everything. Live charts now, it has everything. And one of the greatest parts of it is the community that interacts all the time. Face is just the tip of the iceberg. We try and share our views and give you some actionable stuff. So I would say if Face has helped you, the way to say thank you to us for doing this for free to support the trading community would be to subscribe. Anyone interested on this Friday in a deal, a discount on a semi-annual or annual basis? Anyone? That perhaps some of the things that we talked about in Face helped you out? Lynn's raising her hand. Okay, it's just a question. All right, well, the only deal I want is Brexit. Okay. What is our take on Bitcoin? That it's an unbelievable move. And I guess that's it, Blake.
Yeah, I can look at Bitcoin. I mean, it is just, it's exceeded all of my expectations.
Yeah.
The last few weeks. I figured it was going to break out, but man, I didn't think it was going to be such an explosive move. But before I go into Bitcoin, and then I'm going to go into all the majors as I normally do, I want to reiterate what Dale said. This is a great time to be part of our community, at least try it out, because as you know, right at the January 1st, or January, I think we're going to do January 1st or 3rd. I can't remember exactly what day. Well, I think we're doing it right on the 1st or the 31st, the night of 31st, basically over the weekend. Yeah. And we'll run a
promo.
Promo. Yeah. For like a week where you can get a substantial discount, some of our best prices of the year. So this is the time that you want to try ForexAnalytix. So if you try it, it's just $1, and then you get the full version, the premium version when you're trying it. And then even if you decide to go with the light event, afterwards, it's fine. But at least you get to try the full version and then, get the discount at the beginning of the year. So like Dale said, right now is the perfect time to try it. And I'm not saying that. I'm not just saying that. It really is, because if you think about the timing aspect of it, it works out because when we do run the specials, you can't take a trial of ForexAnalytix, right?
Right.
Okay. So let's, we got a question about Bitcoin, right? And I will say that Bitcoin, I mean, we're flagging now. This is a pennant. When we broke higher here, and I'm going to zoom out just a second. When we broke out higher here, I was thinking, okay, we're going to see 161% extension at this, 2136. Actually, you can just go ahead and read the analysis on ForexAnalytix, because this is, you can see my thoughts here throughout the week. Bitcoin may be developing a bullish wedge with support key at the 18,000 level and resistance at 20K. No change, but the break higher through the trend line on RSI may be suggesting breakout higher in price soon. That was December 15th, right? So we were here December 15th, right?
Mm-hmm.
Okay. Then intraday, Bitcoin breaks through 20K. Bitcoin surges to all-time highs. Could put the 161% extension at 21,361. That was right here in view. And we went right past it. I mean, blew right past it. So where am I looking at next? The 127% extension of the entire move, which comes in at 24,338. That's the next stop. And it's not letting up. So while we're above 20K, you got to imagine that we're heading here. Does the risk reward, get, I mean, is it great at these levels? No. But if you're putting it away, this is what I told you guys 2 years ago. I'm like, if you're going to buy Bitcoin and you just want to put it away, just put it away and sock it away and just not look at it anymore. And if you're like, well, I think Bitcoin's eventually going a lot higher, then, technically it's a very bullish breakout right now. And even if, and let's just talk about this for a second, even if it drops back below 20,000 in the next couple months, let's say the air comes out of this, for whatever reason, we slip back to 15,000. We've done new highs, so it is bullish, right? It's not bearish, it is bullish. So just keep that in mind. It is a very bullish move that's happening right now in Bitcoin, technically longer term. I don't think I need to go into it any further than that, but Dale, does that make sense?
It does, yeah, Blake.
Yeah, I mean,
there are guys that have astronomical targets.
Yeah. Oh God. Yeah. I mean, there's people that are like, oh, it's going to 300,000, and it may eventually go. And I had to put some year-end targets on Bitcoin.
Excuse my language, but wasn't how's this guy that's in technology and has gone a little bit mad? That he had developed one of the first antiviruses.
McAfee.
McAfee. And he said that if by the end of this year Bitcoin isn't at 1 million, he's going to eat his.
Oh, I've never read that, but I'm sure he says some crazy ass stuff.
He said it like a year and a half ago. No, actually, he said it, I think, at the peak of the first bubble. He was like.
He say a million or 100,000?
He said a million.
Wow. You know what the difference right now between Bitcoin, this move, and Bitcoin the last time we surged up to these levels?
It's not all retail, it's institutional.
It's not all retail. Now it's more institutional money, and now it's and a lot of retail is not involved. The reason why not a lot of retail is not involved because they got burned last time. So
true, and we also know that from Google searches, Blake, because they haven't really rebounded. That was one of the indications that retail is not so much participating in this, and I'm afraid that once they get lured back again, it's going to be, another top.
Oh yeah, but that'll be at what, 50,000? So
Who knows?
you know, it's
Yeah.
the point is Bitcoin is breaking out, and your aunt Sally, she's not in it this time. She was in it 2 Decembers ago.
Yeah.
When we were here, right? Or 3 Decembers ago. I remember when I was on an airplane, and my nephew's mom called, and she's like, should I be buying Bitcoin? I'm like, oh my God. And that was right at the highs. I mean, because it was December 17th or something. Like, I was flying to New York. And I'm like, no, don't. But that's what was happening 3 years ago. Now, no one's calling me because they all got burned here. They're not getting in here because, you know,
they were broke, and a lot of them lost a lot of money in altcoins.
Yeah, I mean, a lot of them
they were
lost
making
a lot
money
of
in
money,
Bitcoin, and they
they're
went
like,
to the trash.
Yeah, I'm not doing it again. I'm not going to do. I fell for it one time. I'm not falling for it again. So by the time they fall for it the next time, it'll be up here. I mean, that's just, you know, it's human nature. Anyway, I'm sorry. We got to get into analysis.
Actually, I hate the asset class.
What's that?
I really don't care for the asset class cryptos because I really don't understand it.
You know,
I never could really.
I have a lot of I read a lot about, you know, people are like, well, I'm going to, buy all the altcoins because this. Yeah, if I was going to buy cryptocurrencies, it would be only Bitcoin. I know I've been saying that for the last, year or so, because it's the blockchain that you're buying. All these altcoins, I mean, they're going up in sympathy. It's kind of like, I don't
know
when you're
what
buying.
it is.
What's that?
I don't even know what it is really. I've listened to people explain it, Mark Yusko, everybody, and I don't know, can't absorb it.
Yeah, I mean, I think it's one of those situations where if you're buying, cryptocurrencies, it's probably best just to buy the original. You know what I mean?
Yeah.
Anyway, let's
All
go
right,
into
buddy.
the charts. So here's the euro. We're knocking our head right up against those highs once again, and I'll tell you guys, this move here in the euro is holding up really well, and I think you've got to take that into consideration at this stage in the game. If you're buying the euro, yes, we are at 161% confluence of the summer's move. This is the post FOMC move. There's a big confluence here. Can we go higher? Yeah, but if you wonder why it's struggling at these prices, that's why. I mean, it's a big confluence of resistance. So I guess I need to write the next level higher of the euro, but I'm going to mark up 122.75 just because that's key today. After that, the next level of resistance would be 123.60. I mean, that's next, 23.60. Okay. Hold on really fast. Sorry, guys. I just shorted some euro sterling, so just give me a second. I'm just putting my stops at break even. Okay. My stops are break even now. So I shorted the euro sterling. When the cable dipped below, it dipped right below 135 for a second. I'm not. It fell on some comments about negative rates, and also the lack of progress of the Brexit deal. But just keep in mind this is the breakout point too. So that's why I think 135 is pretty important. So what I did is I just sold some euro sterling at 82. I already just moved my stops to break even because this way I don't have to deal with it. I'm just, with you guys. Matter of fact, dude, I got within 1 pip of the high. Now that doesn't mean that's the actual high because it could it could go higher. But I mean, of this, that was lucky. That was pretty lucky. That was pretty lucky.
You got lucky because those planets were.
Yeah, right. No, watch.
Kissing each other.
I'm going to get stopped out right now because we just said that.
No,
it's going to go boop. But anyway,
Jupiter and Saturn were kissing.
That's it. That's exactly why.
That's a big trade.
All right, it was huge. Anyway, so the cable's sitting on support. Oh, you know what? I need to go do support for the euro. So let's do the euro first. Okay, so the euro, big support on dips here. I think if for some reason we get a dip back down to 71.75, you have to be a buyer. But the support here is going to be 122.10. So I'm going to write down both numbers. 121.70, 21.75, 122.10. Okay. And we are bullish, as you guys know. It's just, it's a very, very bullish move here. Let's go into the cable. Okay, so the cable, it's selling off a little bit on some negative rate comments. Also, the fisheries continue to be a big issue with the EU UK Brexit talks, which we were discussing in our chat room. And just so you guys know, one of the benefits of being a ForexAnalytix subscriber is being here in this chat room. I mean, and you can see this is all the chatting that's gone on for the last 2 hours. And this is Friday where it's slow. That's when I came in at 4:48 a.m. my time. And you can just, it's a very active chat room, even on a Friday. So the reason why I point that out is because we were talking in the chat room about, and Amanda's such a great resource there. She's never been on this webinar because she won't, but she's great to have in our chat room. And she's just like, we were talking about this yesterday about how Norway tried to enter the EU a couple different times and couldn't because of, fishing issues and fishing rights. And that's why Norway is not part of the EU. And fisheries are a big deal. And it's the biggest deal, I think, there's a couple big ones, but this is the biggest stumbling block that they're having right now. So, until there's a breakthrough there, the cable may leak a little bit. And that's what we're seeing right now. So I think we're going to see a little bit of support down here if we make it 134.50. I think we're sitting on support right now, but all right, 134.50. We did close above 135.50. So I have to keep it bullish. I know we're back below it right now, but just because we're back below it at this moment doesn't mean we can't rip higher on news. And just remember, we did close above 135.50. Resistance intraday, 135.60 and then 136.25. So I'm going to write down both those numbers, 135.60, 136.25. It's bullish for now. Okay, for now. Aussie. So the Aussie really rejected resistance. It did. Hold on really quick. Think about what I'm doing here. Aussie rejected this 161% or 38% retracement long term. Okay. But it also is holding these dips. So the dips here at the breakout point is going to be 75.75 and resistance is 76.40 now. And that's key resistance. That's why I put an asterisk there. Really critical because it's a long-term 38% retracement. Long-term, when I say long-term, guys, I'm talking the entire move. Like when it was trading above par at 110 all the way to 55 cents, this is the 38% retracement. It is big time resistance. Big time. All right. Kiwi. Kiwi's also at the 50% retracement. You can see that's a big, huge retracement, but Kiwi's holding where it needs to hold. it's holding dips to 71 cents. Resistance right now is 71.70, right? So $71.70, support 71 cents is bullish. Now, one of the things that I do have to mention is that today we could still see some S&P rebalancing because of the Tesla inclusion and everything else. So a lot of rearranging in the S&P. There's supposed to be reported a lot of selling. So because of that, we have to be careful of some, downside potholes in the S&P that could emerge, and that could, put the Aussie or the Kiwi down at support. By the way, we have Canadian retail sales coming up really quick. So let's talk about Canada. So the dollar Canadian, big 161% extensions, working off oversold conditions. We're about neutral on relative strength midday now, or intraday, excuse me. Resistance is at 128, support is at 126.85, and we happen to be pretty much mid-range right now. So 126.85, 128. This is, in my opinion, the resistance that's keeping it bearish. So if we get back above 128, you can see I have an alarm set there. We get about above that, we might actually start to squeeze a little. And then if you're long Aussies or Kiwis, you got to keep that in mind if that starts to happen. Dollar Mexican peso also holding up this descending wedge breakout. We're holding the lows, and so that is support again, 1970. Resistance is at 20, then 2020. So, and like yesterday.
Yep, you brought it up that if you wanted to fade the dollar, things that weren't making new lows while the dollar was USD CAD and USD MEX.
That's right, and you know what? They are holding up well, and they're still holding up well.
They actually advanced after you said that.
Yeah, thank you. Yeah, yesterday we got a bounce back up towards 1991 or whatever. It slipped overnight, but that's just because stocks came back. But they're still holding up pretty well, and I'm not saying you should be buying them. I'm just saying that you should keep them on your radar. And because we broke out of that descending wedge on the dollar Mexican peso, I had to flip us back to range from bearish before as a result. Okay. Let's see if we can do one more before this Canadian data. Dollar Swiss. Now, the Swiss National Bank's been pretty active. You can see how active they've been. If you go to the Euro Swiss, they push the Euro Swiss from 107.60s or 70s to 108.40. So the dollar Swiss is held up as a result too. I do think that we're in this channel and we really have to get above 88.90. I think we wrote that down yesterday too. 88.05 is support in case we surge to one new low, because that would be channel support, and the 161% extension. So 88.05 and 88.90 is resistance. It is a bearish trend. See if we can squeeze out the dollar yen really quick. So the dollar yen got a little bit of a squeeze. We hit the 161% extension of this move. We did a little bit of a false breakout. We might be developing an inverted head and shoulder pattern if we can hold around here, but I'm not going to bet on that right now. I'm going to just assume that 102.85 is support. Resistance is 103.65, which was previous support right here. Okay. So 103.65 and support was 102.85. And we're going to keep it in bearish while we are below these levels. Now we have Canadian data. So here's the calendar. Here's data flash. So you guys have it. Hold on really quick. Let's go to the dollar Canadian. How much time do I got, Steve? Dale, anybody? Shoot.
You have just a few seconds, mate.
Shoot. I was going to pull up Bloomberg, but
10 seconds.
Oh, sure. Bloomberg.
There you
Canadian
go.
retail sales right here. Okay, so they came out just a little bit slower than Bloomberg, but within a millisecond. So that's pretty good for data flash comes with ForexAnalytix. Bloomberg costs you $2,800 a month. So just, whatever. You guys can do the math there. So that's data flash. I'm going to go ahead and get rid of that. That comes with ForexAnalytix right there. So the dollar Canadian's moving higher after that data. Resistance right now in the dollar Canadian. Remember, it's going to be 128, but we have channel resistance here at 127.85. So just keep that in mind if you're long, because you just want to be a little bit more careful with those as we. Oh, good. Canadian yen's moving lower, which, by the way, that is a pattern in play right now from yesterday. We have a head and shoulder pattern in case you missed it. So dollar index, we're going to continue on so I could pass this over to Steve and Dale. Stelios is out picking his nose today. He's not here, so I don't know what he's doing. He's just like, I can't be there today. So
he didn't give specifics, so probably some out of marriage relationship or whatever. I'm kidding,
that's
of course.
Funny. No, I would assume it's lockdown, kids at home related. That's if I had to guess, right?
Probably slicing his wrists at a bench in the. I'm
so
kidding.
he was having, just so you guys know, he was having issues with internet connectivity, and then he's got his with his routers, and then he's got his daughters are at home because you guys are all in lockdown in Greece, and so poor guys, he might be pulling his hair out. Oh, never mind, he's bald. Never mind, he's not pulling his hair out.
That he's not doing, I can guarantee.
That he's not doing. All right, so let's talk about the dollar index. Sorry, I digress. Okay, so here's the 161% extension that we've been hovering around. This is the summer consolidation, but more importantly, where the dollar index is at, this is the COVID move, right? This is the COVID move. That's the COVID spike up. That's the 161% extension of the entire COVID move. Comes in at 89.50. So if the dollar index gets down to 89.50, you just need to, if I was short the dollar, like outright short the dollar, I'd be like, yeah, that's, did I say 89.50 or is it 88.50? I'm sorry. Oh, it is 89.50. I would be a little careful there just because I'm not bullish the dollar, but I think that the risks of a bounce, especially being as oversold as we are at these key fib levels, the risk is the dollar might bounce back towards 91 again before it resumes its downtrend. So anyway, just some food for thought. Intraday resistance is going to be right here at 90.11. That's the previous support. We might just be flagging for all we can tell. We just might be developing like a flag pattern like this. And we just might be bouncing back till we get to 90.10 and then, then roll over again. So it's bearish. And by the way, if you guys are, for, whatever reason you're new listening in today for the first time, we do the bias chart every day. It's important. So you have, you know where the trends are and you know what the key levels are. Just because the euro says it's bullish doesn't mean you can't short it. It just means that if you do short the euro, you're going counter trend. So, take smaller positions. Don't overexpose yourself. And if you're like, oh well, the euro is bullish, we dip down into support at like 91 or 121.75, and you go, wow, we're in a bullish trend. We're back at support. Maybe that's the right time to be long, right? So the bias charts will help you in that sense. We do this every day because the levels change and the markets are constantly changing. So are trends. Although the dollar index trend is obviously pretty bearish. So we talked about the US dollar Norwegian krona yesterday. We talked about this channel. We held the channel support. I think yesterday, if I'm not mistaken, we wrote down, let me guess, 55? 855. We did. And guess where we hit yesterday? This is when we were trading over here at 860. We hit 855. Chris, remember, if you remember yesterday's conversation, I said it's in between fib levels. I don't have a good idea of, any level. So I think it's going to be channel support that holds it. That held it. We hit channel support and bounced. So 855 is support. Resistance, well, 865, but and then 869. But that's it. 855. It's bearish. 865, because that is the breakdown point below these lows. Now remember that that's the breakdown point right here. The double top is completed and we're very oversold. So the risks are mounting that we get a bounce. They are, as we talked about yesterday. That doesn't mean you should be going long. I'm just saying if, you just have to start being really careful about being short the dollar at these levels. I do think that the dollar is going to end up leaking throughout, the end of the year from like Christmas through New Year's. It's just going to be like kind of a nonstop dollar leakage. But the question is, do currencies like the US dollar, Norwegian krona, do we get back towards 875 before we do that leakage? And that's what I think the risk is right now, is that we see a little bit of dollar strength before next week. Let's go to gold and the S&P. And then
although as the days pass and we get closer to the holidays, I'm not sure, Blake, that there's going to be anybody in the market to actually do that. You know what I mean?
To do what? To bounce the dollar or to?
Yeah, I mean to try to change even temporarily, the short-term trend.
Yeah, if anything, it's just because you're going to get some people reducing positions, and I think what could be the case is maybe some over the weekend Brexit news. It doesn't look so hot.
Yeah, that's the only thing that's left to actually move things. I mean, some type of an upset.
We have a U.S. government shutdown and no stimulus, which everybody's everybody's priced in that. Or we get to buy the rumor, sell the news on stimulus too, because everybody knows the stimulus package is here. It's coming. Well, anyway, let me finish with the S&P real quick, and then gold, and then we'll talk. So here's the S&P. Now, just know where we're at. This is the 127% extension. There we go. This is the COVID move lower. We're at the 127% extension. Oh, I forgot. This was the chart of the day yesterday. You guys, if you read the blog, it's the chart of the day yesterday. 127% extension. So I still think that we're going to melt up. I believe we're going to do this blow off top going into the beginning of the year, but that doesn't mean that we can't stop today for a couple of days. And this is where that dollar strength may come in. I mean, if we see a little bit of selling before we, break out, that might usher in a little bit of dollar buying. Who knows? But I do believe that this 37.30 level is big. 37.30, 37.40. But it is bullish. I wouldn't stand in the way. But like I said, there might be some short-term selling just from the rebalancing. So just keep that in mind. I know I already mentioned it, but support intraday 3,700, because that was that little breakout point. So 3,700 will be support. So as you can see, I don't think the dips will be deep at all. Gold. Last but not least, gold. We talked about this all week. We had a head and shoulder pattern. Once it broke that head and shoulder pattern, it invalidated it, right? Because we held the 1820, broke it. Then we came down, what is it, 2 days ago? We came down and retested this broken trend line. Technically, by the book, happens exactly like this. tested that trend line, bounced, broke above the head. So that's the breakout point. Remember, we were writing down 1875, then 1888, if you remember earlier this week. We broke that. Now we came down and retested the breakout point perfectly. And so today, 1875 is support. Resistance is, I'd just say 1900. That's it. And that's bullish. And if for some reason we drop below 1875, I think we need to recognize that this is really more key support. So in the event gold turns for whatever reason, that is more, that's really key support, 1850. But that's good if you guys trade gold, because if it slips through 1875, it might give you a quick 20 point drop, that you can short. Anyway, that's it. That's your bias chart. Now let me go ahead and take a picture since Stelios is not here. So I'm gonna go ahead and take that. Give me 1 second, guys. I just need to save it. Okay. So Steve, how you doing this morning?
Good, mate. How have you been?
Getting ready for the holidays. And just so you guys know, I'm gonna tell you guys some personal stuff. This year, my wife's business has been pretty busy because she has a gifting company, a local gifting company, and she curates like gifts from local makers here in our area. Her business has actually gotten busier this year because of a lot of people aren't out shopping and people want to support local. So it's increased her traffic for the last few months. And the reason why I'm telling you this is because over the last week and a half, especially if you've been in the chat rooms, you might have noticed I might have disappeared for an hour or two because I'm helping between my wife and her staff. I've actually ran around a lot the last couple weeks, helping her pick up some product because she's like, we ran out of this and I've got no one else to go grab this. Could you go get it? And the couriers are too busy, delivering stuff because it's the holidays. So it's been quite nuts. And I guess the reason why I'm telling you this is because I don't even know why I'm telling you this, Steve. I was telling you this for a reason. But anyway, the reason being that that if you guys have noticed, I sometimes I'll disappear. It's like I might have to leave for like 30 minutes because I have to go run an errand for my wife's business. But that's part of the holidays. I think what we were saying is I was asking you is how are you guys ready for the holidays? Because I'm not. And the reason why I'm not is because I've taken on all this extra duty this year as not only, yeah,
I don't even know what
father,
it means.
I'm a husband trying to support my wife's business, her business a little bit. It's been crazy. So are you ready for the holidays?
I don't even know what it means being ready for the holidays this year. You know what I mean?
You're like, well, the Christmas tree went up. So there you go.
Yeah, exactly. I mean, other than that, during this COVID year and, with circumstances being what they are, I really have no idea what it means. I mean, what else?
Yeah.
Steve is working always anyhow.
Hey, we have Grega.
Hey, there is our Christmas gift. It's Grega.
I was not expecting Grega Horvat to be here today. How you doing?
Yeah, that's the Christmas gift.
Yeah,
right.
I said that I will join once this week, and today is the final day, so I must be here.
Well, you know what?
Yeah.
I'm gonna bow out. So this way, you guys got. Hey, Dale, do you have an interview today or no?
No. So
He probably got a free pass from the nurses there that take care of his leg.
That's funny. Well, the good news is then you don't have to button it up right at the top of the hour. So NG just asked this, Steve. When's the 2021 outlook year ahead coming out?
Worst case scenario by tomorrow. So you'll have it during the weekend to read.
We've been putting it together. The
Yeah,
last
it's a lot of material. All of us will contribute to it, so you'll have a lot of reading to do there.
So Jonathan has asked, anyone else selling silver up here? Oh, so I got to ask you then, just really quick, and then I'm going to pass it over to you guys since Greg is here. Why would you be shorting silver? I guess I'm asking because until it reaches, and I see how it's at horizontal resistance, but for me, because we created an equal or higher low, I don't think I would be selling until it hit the 618. Now, and that comes in at 2670. And just so you know, I'm bullish silver, and we've been bullish the last couple of days. That was our chart of the day when it broke 2450. But the thing is I don't know if I'd fade this move until it hit a key fib. Not me anyway. By the way, just really quick,
I want to sell silver when the central banks close shop or the sun
I
goes
just
cold.
closed my euro sterling for 20 pips. I shorted it at 82. I just closed it at 61. So that was a lucky. I literally top picked that, and I was very, very lucky. Very, very lucky. Anyway, all right. Sorry, you want to sell silver when? Either
when central banks close shop or when the sun goes cold. Okay. Take your pick.
All right. Hey guys, I'm gonna leave it to you. I want to say, and here's one last look at the bias chart if you guys want to take a picture. Have a great weekend. Hope you guys get, for those of you that celebrate Christmas, hopefully you get your stuff together this weekend. I have to actually wrap gifts this weekend because our tree has no gifts because we're so behind. So anyway, hope you guys get caught up.
Poor
and
tree.
Huh?
Poor tree.
I know. And my
lonely tree.
The thing is, when you have teenagers, it doesn't really matter as much. And my Christmas tree, I forget to turn the lights on at night sometimes, and I forget. Anyway, Steve Stelios. Oh, I don't think Stelios is here. Steve,
nope.
Coach, Grega, good to hear your voice. I'm going to pass it over to you. So
have a good weekend, buddy.
You guys have a great weekend. I'll see you on the week ahead video.
Bye, Blake.
Bye, guys.
Grega, just grab the screen, mate.
What's going on?
Good. How have you been? How's your leg?
How you feeling, buddy?
It's better, Now I need someone to help me with the kids. Since I'm home.
Okay. Didn't you bring any of the nurses back to help you with the kids?
Yeah, I'm still planning.
Okay. I'm not sure if your wife is going to like the idea, but in any case.
She doesn't care as long she can go for a short vacation, actually.
Okay. That sounds like a good deal. So grab the screen.
Yeah, doing on it. Okay.
Euro USD. Okay, ending diagonal.
Yes, we are looking. I think that euro dollar and dollar in general, dollar weakness. It's moving in such extreme levels just into the holidays. So I think that there can be a slowdown. There will be end of the year flows. So I assume that we could be seeing some retracements. So rather than focusing on 1 hour, I think that we should still be focused more on this 4-hour time frame charts, where, let me just put this up, where I'm observing this 5-wave movement up from start of November, and looks like that this 5-wave movement is still not finished, and actually we could be headed towards the upper side of this current channel that I'm tracking. So if we go to the 4-hour chart here, and you can see that I'm looking and observing the price action from 1.16 level. So this structure should be made by 5 waves. And if you count it, you can see wave 1, you have a wave 2, very nice.
And extended wave 3.
5 waves up, yes, in wave 3. So watch out this trend line support of this middle channel, in this middle wave 3. If this one is broken, then I think we are stepping into wave 4 retracement, and in such case, watch out for 1.2060 back to 1.2 level has to be the next potential support. Also, keep in mind that 1.2 level is also the previous peak
high
here. Yes.
Yeah.
So I think it could.
Gregor, we lost you. Yeah.
Retracement.
Gregor.
Yeah.
Can you hear us? Because we lost you for many, many seconds. We've lost you again. Yeah.
It's better now?
Now we just heard you again. After it's better now.
Okay, perfect. So I'm expecting euro to see slightly more upside, as I said, after this fourth wave retracement. Okay, so, but generally speaking, the dollar is moving into very extreme levels. As you know, euro is also at extremes. If we look at this weekly chart, I think that may be important reversal, if we see it at the start of 2021, could be once we reach this potential February highs from 2018. So I think that this could be very easily achievable actually in the next few, or I should say in the first months of 2021.
Wait a second. I really don't understand that much this formation. I mean, I understand the formation completely, but I mean, isn't the trend line resistance for the time being completely arbitrary?
You mean this trend line?
Yes.
Yeah, I mean, that's just an idea. If maybe we just stay sideways.
Yeah, I mean, so it's not that we are currently testing a specific level. I mean, it it might be whatever.
It just represents the potential idea.
Yeah, the potential of a very, very, very large triangle, which we'll have to find out if that's the case, right?
Of course, because if we are tracking a corrective price action up here from 2017 lows, then of course it can be a free wave movement.
Yeah, so we might have a higher high from that one.
Yes, exactly. Yeah. Or if we see a very strong reversal to the downside, let's say that we see significant risk off in 2021, then maybe dollar will be headed much higher than we think. And if we go, let's say, back towards 1.15, this could easily be ongoing triangle or still very complex.
Let me say in advance, Matt, that I put my money that we're going to see the higher high.
Yeah, I mean, definitely it appears to be a much better scenario at this point.
What are you looking for, Steve? 125? Steve Volge?
I think that call me crazy, but I think we're going to see the 3 handle again, 130.
Okay, it's not crazy.
Yeah. What about stocks during this same period?
I believe stocks are going to be doing just fine as long as they're creating inflation in the rate they are. Stocks are going to be doing fine. Now there's a different question to be asked here. How are stocks going to be doing in real terms and not in nominal terms? I think they're not going to be doing that well, right? Because if you have your money in the US stock market and inflation is picking up, dollar is getting demolished over time, and you're a foreign investor, do you actually make a lot of money? No, probably you're not making a lot of money. But you should still have a positive return, just because not on all stocks, of course, right?
So you think emerging markets are better?
Yes, absolutely. I think during this decade, emerging markets will shine again. Yes, absolutely.
Yeah, and
commodities, emerging markets, anything that benefits from a weak dollar will shine again.
Let me just share another thing here. I should click stop share, right? Stop share, share screen, okay, share. Okay, here's this emerging market ETF.
There you go, interesting.
Yeah, and we are potentially at this resistance right now. At the same time, when the US dollar is at very extreme
yeah,
level.
so that would bode well with your scenario of perhaps a rebound in the dollar short term, like temporarily, right? And then a breakout from this triangle, which is probably going to be then a massive move to the upside, right?
Yeah, so I think that after pullbacks, we could see some very interesting setups. Also, I have here this commodity index. Okay, this is a longer
which
term
seems
chart.
to have bottomed.
Yeah, this appears to be very nice on the longer term scale.
Indeed.
Very nice pattern. And even if we just try to ignore the long-term structure, we will not say that we are going back towards 2008 highs, right?
No, I'm going to tell you, we're going to surpass eventually the 2008 highs. Write that down.
I mean, let's say for the next year or so, there can be opportunities, even if we go only towards 200 back into these wave 4 levels, because on a smaller time frame, okay.
Somebody's asking what are EM stocks means. EM stands for emerging markets.
Okay, so, and here we have potentially 5 waves up.
Yeah, nice one.
March lows. So I think that there can be very nice opportunities once we see this pullback. And at the same time, I would be expecting dollar to recover. And if we take a look on dollar versus the S&P 500, which is here, well, I can see that we are potentially in these late stages of this current cycle that we are in. So I would not be surprised if we see dollar index recovering at the start of 2021, or let's say in the first 6 months or so, or next year, because as you know, it's very hard to say what will be the time frame for the potential pullback when this one kicks in. But I really think that we are at very important extremes here, and that there can be a turning point coming. And if that would be the case, as you know, stocks would come aggressively, maybe to the downside, considering that the S&P 500 could be looking for a top.
Okay, speaking of which, and since the conversation went into commodities, etc., and Blake mentioned it, why don't we visit a little bit the precious metals, which a lot of people are interested about.
Good interview, Steve.
So, as you know, we've been tracking this fourth wave consolidation for a while from summer highs, and looks like that this one has now bottomed. Okay, because
I agree.
Yeah, I mean, we are seeing a very nice reversal up from this previous peak. This was a very nice support. We reversed also higher from this lower side of this corrective channel. And the most important is that we have seen this overlap with 1850 a few weeks back. Because if someone thought this was wave 1, wave 2, wave 3, and that would be your wave 4, well, you have seen an overlap. So obviously the bearish impulse comes to invalidation point. And this invalidation is actually a very nice confirmation that market has probably completed this corrective drop. Now, the next very important level would be to watch out around 1900 or $10 higher.
1920 is my level.
Yeah, I mean, it's definitely very important trend line right there. And if we can take this out, I think that we are going to see more upside within this wave 3.
Yeah, I agree with you. I've been saying for a few days that I think the chances that we've actually seen the low for now are substantially increased.
The question is, what will again be the correlation with the US dollar? I mean, if this one is coming into support, well, then maybe gold will take longer time before it really breaks higher. But as you know yourself, there were a period, even this year, when
they were moving together.
Yeah.
Exactly. Yeah, and it can happen again. Yeah, somebody asked me a few days ago the same question. Because I was bullish and I said we might have bottomed. At the same time, I was saying be careful, because at some point dollar should squeeze people higher. So although I remain very bearish the dollar, you shouldn't be like selling it right here. It makes no sense. I mean, there's no risk reward. And somebody asked me like, yeah, but how can the dollar rebound and gold and
Both
silver
go up at the same time.
Yeah, and I said, listen, doesn't mean that they can't both be going up for a few days or even a couple of weeks. We've seen that happen before. So it's exactly what you repeated now. So I'm 100% with you. I mean, I really don't care about dollar that much. First reason I don't care that much is because I believe whatever rebound it gets, it's going to be corrective. Second of all, for the reason you just mentioned, because I do think that gold and dollar can be moving together higher, not for a very long period of time, but I don't think the dollar is going to rebound for a long period of time.
Yeah, I mean, if there would be a perfect correlation, then we would already see gold trading at the highs.
Yeah, exactly. Because the dollar is at multi-year lows.
Exactly. So it's very hard to look at tick by tick. And that's why I think that the short term, it doesn't really make any difference.
Yeah. So I'm assuming same deal here with silver. And in all actuality, silver seems to have already made the move higher, right?
You mean this breakout?
Yeah, I mean that breakout, exactly.
It's very nice jump here in the last few days. I was looking here to be this triangle to complete this complex correction. Firstly, thought that wave E will be a little bit deeper, okay, but now it looks like that it's a very small.
But you know what it is. A strong market very frequently doesn't have dip.
Yeah,
dips.
But from Elliott wave perspective, it was a very tricky structure for some because this drop here didn't take us below the September levels. So it was very hard to say that silver has bottomed, but I've been looking at gold at the same time. So gold has seen a move into a new extreme, but because gold moved impulsively higher, so I thought myself, okay, gold is weaker, but it has made an impulsive rise. It means if weaker metal is now showing us evidences of a reversal, then definitely silver is going to be even more stronger and probably has bottomed as well.
I agree. And I think that people will just have to chase silver higher.
Like for short-term traders, definitely not an easy levels, especially not during this period of holidays. It's not an easy level maybe to enter on the short-term basis, but looking, let's say, to position yourself for the next 6 months or so, I mean, either it doesn't really make sense, any difference, either if we go up from here or after retracement down towards 61.8% for a more complex correction. It's the same thing. I think that sooner or later, this silver will be higher. So it's just your plan, how you will approach this current structure.
Can I ask you something else? Do you think that crude oil might be building in an ending diagonal here?
On intraday?
No. Daily chart.
Daily chart. You mean that this, where you see ending diagonal?
Yeah. There. I can see it on your chart.
You mean if we see a pullback here? And
no. Zoom in closer to the many last days of price action. Yeah, there you. Yeah. There it is. There it is. Yeah.
Yeah. Well, if we go to details, then this current extension lower should definitely put in a top in, if not today, on Monday or Tuesday.
So what do you think about it from an Elliott wave perspective? I mean, do you think?
I'm looking here at the 4-hour chart, okay, and looking also I was looking for a very similar pattern here. So it could be an ending diagonal if we'll see a top in the near future, and this could be then a wave 5 to complete this current wave 3. So definitely around, let's say even towards $49-50 per barrel, it's definitely very important psychological level where I would be expecting at least a retracement back into this fourth wave. And then possibly even higher with the same structure like we were looking on the euro dollar. They're also expecting a pullback and then another jump after a fourth wave.
What about commodity currencies like Aussie, Kiwi,
Very
CAD?
similar, actually, very similar. I mean, Aussie dollar is making a very nice impulse higher here. Again, it could be making some small extension here within a fifth wave to complete wave 3 in the near future. So be aware of this wave 4. But I think that there can be very nice opportunity after this setback. I mean, I'm looking at this Hang Seng index. It looks like that there is a ongoing consolidation.
Yeah.
So expecting more upside here. I think that this could support the Aussie, but much better entries would be after retracement.
Yeah, I mean Hang Seng especially, this looks totally corrective as a pattern for the time being.
Yeah, I mean, I really love this structure.
Yeah. What else? What about CAD? Yeah.
CAD also, I mean, we are here in a fifth wave of decline, but still looks like the short-term patterns are incomplete, still ongoing weakness for a wave 5 here that could reach lower trendline supports. And looking at the intraday structure, we are looking for another drop here into wave 3, possibly in the next 3 trading days. We could see a broken triangle here that I'm tracking for a wave 4, but then pullback and even more weakness. So
and even lower than yeah.
Bearish structure is moving into some extremes, but not over yet, it seems.
What's the bigger structure here in USD CAD? I mean the long-term view, like the weekly.
I mean, we could be here in a flat formation or maybe a very big triangle, but still, I think that there is, even if there is a flat formation, you should realize that we can be headed back towards 2017.
Why don't you pull the same weekly chart in for the NOK next to it? Because I have a reason I'm asking for it. I'll tell you what the reason is. The weekly, though.
Oil.
Now, do you see what my point is about to be?
Yes, the bot can go towards.
No, my point is, looking at the NOK, I think we've seen a generational high. I don't really think they can diverge that much.
Yeah, okay, that's for once we see a potential bottom, yes. But even if, let's assume that we are here in a triangle, okay? Here you will see a bounce for a wave B and then more weakness for a wave C, okay?
No, my point is that I'm very skeptical if USD CAD is actually going to go higher. I mean, produce a higher high, because I think USD NOK is never going to produce a higher high.
Yeah, I mean, shall I show the wave count?
Yeah, sure.
I'm not saying that we will see maybe a new high here, but the structure still, for now, is still valid. But what I would be focusing on, at least for now, is for more weakness after within this free wave drop. So, and let's see then if we maybe see some kind of a bottom down there around 8 level or no. So I think that for now it's definitely better to stay on the bearish track. But that's how I approach both of the markets.
Okay, fair enough. Yeah, absolutely. What else? What else are you tracking that is interesting, you think?
For now,
yeah.
I mean, Aussie dollar is probably the best that I have on my list, and metals in general that we already covered. Euro is also can be very interesting till we reach that level. I mean, we can also look at cable. We have some cable. Now, on cable, I have been expecting weakness.
Cable is going to be a tough one. I mean, the rebound doesn't look impulsive to me for sure. But on the other hand, with so much binary risk, now that we're getting one way or another some kind of a result from the negotiations, if it wasn't for that, I would be actually shorting the cable. But I'm pretty scared.
Actually, I'm with you. I agree here, but still, we don't have any evidence that that's the case. I mean, maybe after another high here to complete this current fifth wave up from this December lows, and then we see what happens. Maybe in January there can be some interesting reversals.
Yeah, that's going to be interesting.
But it's a very tough structure. I mean, very tricky.
Yeah, and you know, it's also very.
Remember yourself, I was looking here to be at top of this corrective rise because of sharp drop. I was wrong on that one. We completely erased those losses. So, but still, if you look at the
yeah, true, but still the way we're climbing, I mean, doesn't inspire me.
Yeah, and the rise from September, okay, it's much slower compared to this lag.
Yeah.
So
yeah, it is
that
more of a grinder. Yeah.
And momentum is diverging also clearly.
Yeah, the real simple implicator. He was renamed by a simpleton.
Yes.
So
nice stuff, Greg.
There will be interesting time to look at opportunities on cable.
Somebody's asking, and I think it's a good question. We've been looking at it almost at a daily basis here. Why don't you give us the Elliott wave count on copper, which has been relentless? I mean, it's been, you know, unstoppable for the time being.
On copper. I have it here. I'm not sure. I don't have it updated, I guess. Okay.
Massive, eh?
Yeah, I mean, definitely an impulse here.
Yeah.
Very strong.
I mean, just look at the way it consolidated after the first move higher after March. I mean, it kept producing higher lows while consolidating higher.
Yeah.
There.
Yeah, I see your point. So it means that market is in a very strong upturn.
Very strong. Yeah.
Bears cannot take
no
slow out. And the whole structure here, looking back from 2006, is definitely looking very corrective.
Mm-hmm.
In fact, this could be B, C, D.
1, 2, yeah. Oh, yeah. So like a big triangle, huh?
So watch out pullbacks. And this one goes actually not nicely with that commodity index that we checked.
Yeah.
That's exactly the level I've said that I would be interested in buying, 330, a retest of 330.
Yeah. I mean, first half of 2021 could be causing this very nice retracement, not only here, but across different markets.
Yeah, obviously buying copper after this massive move where it is at the moment, it's crazy, right? I mean, from a risk reward perspective, it's like stupid. But buying pullbacks after seeing this type of a move higher, I think it's the way to go.
Yeah, I agree.
Okay, so we get a look into early next year, some type of bear market rally in the dollar, continuation move in the metals, and some type of pullback in the S&Ps with a little bit of risk off while the dollar's going up, and be bullish commodities for the whole year, or at least the first half. Buying breaks is embryonic. So am I reading your analysis?
Yeah, you just
have it
yeah,
correct?
Absolutely. In essence, Dale
just highlighted everything what we
in essence, Dale, the theme we've seen the past few months, I think is going to continue, and in my opinion, it's going to continue for more than 2021. But as always, there will be counter trend moves.
Yeah.
And looking at how everything has been moving rather extremely, I think we might be getting closer to the, first like type of a pullback. That's why, it's not advisable to be, trying to join this trend now. But I don't think people should confuse you know,
Corrections.
any reversals as, you know, the beginning of something different, but rather as, you know, short-term pullbacks that will produce opportunities to join.
Yeah, all the grains, Greg, look real good. Wheat broke out.
Yeah,
Beans have been the leader.
I just noticed this pattern now, and what I really love about it that we have seen a pullback, and what I see, it's a free wave retracement here.
Let me make it very, very simple. Whatever central banks can't print is going higher.
Yeah. So real stuff.
Can't print grains.
Exactly. Can't print copper, can't print gold, can't print silver, so on and so forth. Can't print uranium, can't print gas, crude, you know, you name it.
Yeah. This one looks very nice, actually.
Chinese have been stockpiling wheat for a long time, and you know, you go back, you see where
they're not stupid.
Yeah.
If one thing they're not, it's they're not stupid, and you know, Chinese, they have a long-term plan.
Look at feeder cattle. I mean,
yeah,
that appears to be. You can see the blue lines. It looks like that I made these analysis a few months back.
Yeah.
Yeah, agricultural commodities all look pretty good.
Yes.
So buy whatever can't be printed.
All right. That should be the headline on your 2021 look ahead.
Yes, buy whatever can't be printed.
If the Fed can't print
it, buy it. Yes.
Yeah, I like that. All right.
Yes, but traders, not traders, but this is more for investors, you know, to make the right approach, because trading still, I mean, this can take time before this move will make a progress if we see retracement. So it's really important to have the right approach towards these structures.
Yeah, I think since the past few months, trading and direction have been very easy. It's you know, the first time in a few years that I feel that things are moving logically, you know, and how they should. There is one problem though, as you both mentioned. Only if you have a medium to long-term time horizon, right? Because that doesn't do you any good if you're trading, you know, for a couple of days at each time, right?
Exactly.
Yeah. You know, if we're moving back into this commodity bull market, there used to be something that was a yearly phenomenon called the February break, where when you had bull markets going in commodities, a lot of major highs in gold have been made in late January, February, and also you can get maybe that's when we get the dollar rebound, commodities pull back for long-term entries. Grega?
Yeah.
Okay,
it's not unlikely. I mean, it's just like it's just like 1.5 months away. I mean, it's not unlikely.
Yeah, it's
might
not
be the
that far
case.
away.
Yeah.
For a young guy like me, it feels like forever. So anyway, Grega, I'm glad you're healing up, bro. And what a way to cap off the week with your looks. You're the best, buddy.
Thank you,
and
Grega.
Steve, you're second best.
Okay,
and
I'm fine with that.
Okay, and guys that are in the room, you're the greatest, and ladies. So have a nice weekend, everyone. Enjoy it. Really a good time to at least take, like Blake said, take the trial, and it's $1, and then you could check everything out, and then you'll know, you know, you've done your due diligence.
People are asking if we have. Sorry, Dale. People are asking if we have face on Monday. Yeah, absolutely. I mean, it's the 21st.
There's no holiday. Maybe not next Friday.
Yeah, obviously not next Friday, but I'm pretty sure that we haven't really discussed it, but at least until Wednesday we're going to be here, so don't worry about it.
I've guessed booked through Wednesday because
okay, so you know, at least we're going to go through Wednesday, at least.
Okay. All right. Well, everyone have a great weekend.
Yeah, enjoy, guys.
Bye bye.
Right.
Bye bye.
Great hearing you, Grega. Steve, it's great hearing you every day too, buddy. So don't just count your pips, guys. Count your blessings. Get ready for 2021. We're gonna work together, mastermind, and guide each other to success. And with that being said, adios. Have a great weekend. And thank you, guys. Adios. Let me say it one more time. Adios. Gracias. Nostrovia. That's for Greg. All right. Bye-bye.